Hello, everybody. My name is Lush Eisner, and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record 2 videos per week, so make sure you ring the notification bell to get notified each time one comes out. Since we're still going through it, I wanted to answer the question, how long is this bear market going to last? You know the story by now. In 2022, the major stock indices got crushed thanks to the interest rate hikes and have tried several times to rally, most notably this past summer before the indices sank to their lowest level of the year in October. Bummer. Well, in the first part of 2023, the stocks were rallying again with the TSX returns trying hard to climb out of negative territory. So the big question is, was that the rally that will lead to a real honest to God recovery? Or was this just another head fake bear market rally? It's hard to say. It's usually clear only in retrospect when a recovery begins. But I thought it would be a good time to go through 5 common questions about recoveries, like when and how do they start, and when should I start investing again? That way, you won't be entirely unprepared if this rally is the rally, or if it's not. First, the basics. What's a market bottom and what's a recovery? A market bottom is a downturn's lowest point before stocks climb and surpass their pre-fall levels. That's why, after a big drop, people on Twitter ask, so have we seen the bottom? Well, as we've learned this past year, it's notoriously hard to call the bottom thanks to bear market rallies, which occur when stocks rise during a downturn before diving even lower. That happened in the 2022 summer and fall, as I mentioned, and it could be what's happening now too. Or it could just be the unavoidable volatility we've been seeing. How long does a recovery normally take? It varies a lot. The US stock market took 17 years to recover in real terms from the late 60s crash. Nowadays, though, the S&P 500 usually takes about 3 years to fully recover, but it has done it in as little as 4 months. More encouraging, perhaps, is that bear markets, when stocks fall 20% or more from their recent highs, tend to last only about 12 months. The S&P officially entered a bear market in June, and it is up from its October low at last check. It sat at 7% year to date for 2023. But a bear market rally of this size is not unusual. So, what needs to happen to start a recovery? The stock market seems to be in a cyclical downturn, meaning the economy is overheated, inflation rose, and central banks raised rates in response. Cyclical downturns end whenever central banks start cutting rates, which encourages borrowing and fuels growth. That helps to explain why stocks have risen. The Fed is not expected to keep raising rates as aggressively as it has been, and there's only a few rate hikes left, if that. So, what should the average investor do? Investing right after a downturn can yield some of your best returns, but trying to time the market is tough sledding. Even pros don't do it effectively in order to find the exact bottom. For average investors, one strategy is to take the long view and consistently invest in low-cost diversified portfolio no matter what's happening in the markets. This is what I suggest. That's because regularly investing exposes you to a bunch of different prices, which reduces the stress of picking the exact right time to invest, which, like I said, is tough. Whatever you decide to do, keep in mind that you're absolutely guaranteed to experience bear markets throughout your life. And if history has taught us anything, it's that it would be a mistake to take your money out of the market for a long, long time. If you have any requests on what you would like me to cover in future videos, please put that into the comment section. If you'd like to get in touch, please reach out on any of these social media channels, and may you have a profitable day.